Right now is a sweet spot for private equity. Interest rates are low, so they can borrow money cheaply, and the stock market is showing a little bit of life, which means that they can sell some of their assets. But the folk at PEP just could not believe their luck this morning when Target SAI Global announced that they were sacking its chief executive. At the same time, they said that they'd received an offer from PEP back on May 15, which valued their company at about $1 more than the share price was at the time. Now, at the outset, we should state that the people at SAI Global think their company's worth a lot more. But if you're a private equity fund and you want to buy a company, what better way to do it when the company sacks its chief executive, with the reason being given that he just wasn't moving quick enough? This is quite an extraordinary development because SAI Global has been run for much of its time as a listed company in the last 7 or 8 years by the one management team. Tony Scutton quit last year in a well-established, well-planned manoeuvre, and the board said they looked well and hard to get Stephen Porges. He started in late January. Now we're just late May and they've shown him the door. The reason they say is because he was looking for quick cuts, cutting costs rather than actually growing the business. New chair, Andrew Dutton, says that he's got a much better handle on how to grow this business. SAI Global is a curious company. It's known by many as being the Australian Standards Board, which sets Australian standards. It's actually got a contract with the board, which is coming up for renewal in 2018. But it's got a diverse business. It also does mortgage outsourcing for the actual processing of mortgages for most of the big banks in Australia. And it also runs an global assurance business for the retail companies all around the world, such as Tesco and others in the UK, where it can verify that the chicken that's meant to come from South Africa actually does come from South Africa and the like. Given that its whole business is in standards, it is a little bit curious that their standards were so poor in choosing a chief executive. Company boards do make mistakes, and this board has made a huge one. Andrew Dutton has now got the time ahead of him, trying to improve earnings at a time where he's also trying to defend against a takeover offer. The stock was trading up about 17% at $5.05 a share in early afternoon trade. This is still well short of the PEP offer between $5.10 and $5.25, but this game has just started and SAI Global is in play.